We do both, in both locations, we do residential and commercial reports. The residential reports are, of course, for the homeowners, and the commercial reports would reflect the needs of industry and investors. And these reports are typically done for financial institutions, for financing, acquisition, sale or disposition, and also for, in the cases of disputes between the partners. And also for extensive additions or renovations for planning. We are members of the Appraisal Institute of Canada. All our members are. We have 8 in total. Besides the 2 partners, Toivo Heinzar and myself. The Appraisal Institute of Canada is the foremost appraisal institution in Canada, and provides 2 designations, being the AIC and the CRA. The Appraisal Institute of Canada designation for the AIC or the AACI is for commercial reports, whereas the CRA designation is for residential reports. It takes quite a bit of training to become an appraiser, with requirement of a university degree, 3 years mentorship for the AIC designation, and 2 for the CRA designation. The CRA designation appraiser can do homes and properties up to a 4-plex. So the appraisal is typically, or almost always, a written report by a professional that provides an objective value of the property. And for a residential report, this is usually a form report where the appraiser inspects the property, the neighborhood, and finds comparable sales and makes adjustments in coming up with the final value. For the investor or owner-occupant, the commercial is a longer narrative report that usually encompasses either the market approach or direct comparison approach, the income approach, and the cost approach. It's a much lengthier report and requires much more intensive investigation and research. The commercial report would apply to apartment buildings, office buildings, retail properties, and office buildings. It'll also encompass land development, and possibly the expropriation or partial takings of lands for easement for utilities, or the municipalities for such things as road widening. The report is usually based on an income-producing property. It'll focus on the income, and it's more of an economic view. So the appraiser in this case has to research comparable sales, rents, determine the net operating income, and how that relates to the value is through a capitalization rate that is drawn from the market, which is usually what an investor, which is what an investor will pay to acquire the property. It's different than, for instance, an owner-occupant who needs a building, industrial building or office building for their own use, and the uses can be quite divergent. And there's also a cost approach to value, which is lesser used approach, but it does have validity in the case of certain properties. The appraiser then has to interpret the various value results from the approaches applicable to the report, and come up with a narrative reasoning on what the final value is. Our work is typically done for financial institutions, such as banks, credit unions, lawyers, in the case of foreclosure or disputes. And and in these cases, we often see a lot of repeat business. On the home side, for the homeowner, it's also for financing, estate planning, taxation, separation or divorce, power of sale. Where we don't see it, and I think we should see it more, is in the case of the sale of a property or an addition to the property, because in many instances people spend the money improving a property and they don't see the end result in value. Under the current market conditions for housing, which seems to have stagnated given the new rules for financing, this is becoming particularly more important before investing money in improving a property. Any questions yet? Well, we touched on this. Between a residential and commercial appraisal, the residential report is a form report. It is often required in the case of financing or the arranging a home loan line of credit, whereas the commercial report is a much more involved report. Also used for financing, but it's a full narrative report that may be 60 to 100 pages in most instances and requires far more research. I hope that answers that question. For commercial financing, the current increase in bond yields and interest rates has and will continue to put a dampener on value. And speaking to some investors, they have been looking for properties for quite some time, and their concern on the financing rates and the cash flow returns has caused them to pull back a bit in terms of what they're willing to pay, and the vendors the market hasn't yet adjusted to that reality, and we'll see where that scenario ends in the upcoming months. In order to become an appraiser, it takes quite a bit of time to become an appraiser. The current requirements are a university degree, followed by quite a few additional courses depending on what your degree is in, and mentorship under an AACI or a CRA, and 3 years for an AACI, and 2 years for a CRA. There is far fewer AACIs than there are CRAs, and gives you a wider scope of work, being that you can do both residential and various commercial type assignments. Does that answer that question? When someone has a commercial property or an income-producing property and they're looking for financing, Don't assume that you're going to get a full 75 or 80% of the purchase price. The financing provided by the financial institution is based on their interpretation of the cash flow and the stability of the cash flow from the property. And in the case of an income-producing property, this is typically 65 to 70% at the most for financing of the value. So in a $10 million property, you're looking at approximately $6.5 million. In the case of land or land development, the lenders are asking for a definite exit plan, being how do you plan on developing, how long is the time frame, what's your profitability and your liquidity going into the investment, and what's the exit. Without those questions and a fair bit of equity, 35% or 40 or 50% equity, the financing for development is often hard to come by. And in those instances, often there's a partner or a mezzanine financing composition of the equity in order to achieve institutional financing for the first mortgage. On the residential side, I believe the market's stagnating a bit, largely because of the new hurdle rate for the underwriting required by the bank and the financial institutions being about 5.4%, even though the interest rates are considerably lower. This was put in place by the government in order to cool the housing markets in major cities and has had quite a profound effect on the market. They anticipate further increases in the interest rates for residential and commercial lending, and this will likely put a bit of a damper on the market, but whether or not this actually happens is we'll only know in the upcoming 12 months. Cost for a commercial appraisal is going to vary considerably depending on the property type. For a smaller property such as a retail, office, or industrial condominium, it'll be, it could be as low as $1,000 and go up from there. If you have a large commercial plaza with several tenants or 15 or 20 tenants with a large anchor type tenant such as a food store, or other large big box retailer, the cost can escalate, up to, several $1,000s or more. But for most properties in the small to mid-size areas, costs will be between $1,000 and say $7,500. And the lead time is, going to be typically 1 to 6 weeks for the appraisal report. For any detailed quote, please don't hesitate to contact the appraiser. The cost for a residential appraisal report can be as low as $300 or $400 and escalate from there depending on how large the property or how unique the property is, whether it's lakefront or has outbuildings or has acreage, and this time frame is much less. You can usually get a residential report within a week. I'm a business owner in Welland. I am not thinking of selling anytime, but should I consider getting an appraisal? If you're not going to sell it or finance it, or you're not doing any estate planning, you sound like you just would have curiosity as to what the property would be worth. I would not suggest you spend the money to just get a report for the sake of getting one. You may be able to get a broker opinion of value or investigate yourself locally with what properties are selling for in the area. But no, I wouldn't go for a full-fledged report just for the sake of it. The difference between an appraiser, which is valuing the real estate, and an assessor usually is works for the government or for a property owner in determining property taxes applicable to a property. And a homeowner may choose to hire an assessor, or a commercial landlord may consider hiring an appraiser if they feel the property taxation is too high. Some appraisers do property tax work. It's a specialized field. We do not. The assessment, I would look for an assessor before I look for an appraiser for that work. When selling a residential home privately, do you recommend getting a professional appraisal to establish a listing price? Yes, I would get an appraiser to establish a listing price, whether you're selling the property privately or not, unless there is just so much evidence pointing to a value due to a number of similar homes selling in the neighborhood. But as a private owner or selling privately, I would definitely get a third-party opinion of value. The other thing a homeowner should do, I think, when they're selling a property is to hire is to obtain a property inspection, and that is not anything we do. You'd have to go to a firm that does that because the purchaser may, and you may find resulting repairs that would impact the sale price. So I'd get an appraisal and I'd get a home inspection. If you're selling a commercial property, I would also get an appraisal. I'd also get a building inspection. And I'd also start looking at getting a Phase 1 environmental report because those are all things the purchaser and the lender, if there's going to be a lender, are going to look for in a commercial report in order to close a commercial transaction. Can I expect to sell my building for the same or more than the appraised price? Well, I guess that depends on how good the initial appraisal was or why the purchase is happening. For instance, if a neighbor is buying the property to expand their own business or assemble a piece of land, it may sell for more, but more than the appraised value, which wouldn't take that into account. The appraisal is, a fair market value based on a willing seller and willing buyer without duress or pressure. The appraised value, if it's recent, and a sale price should be fairly close together. If, for instance, the appraised value is far off the appraised price, I'm assuming maybe the appraisal is representing market and someone is offering less than the property is worth. And without that appraisal, you wouldn't really have any guidance on what to base your decision to move forward or not. In some instances, people have sold properties, which I've noticed, and the property's been relisted within 3 to 6 months for a considerably higher price. So, and the vendor has been successful in making a substantial gain. So this is either due to a rapidly moving market and or a combination of a rapidly moving market and just underselling the property to begin with. And with a good agent, that shouldn't occur. Sometimes people use experts out of their depth due to friendships or possibly using a residential agent to sell a more complex commercial property, and just points to the need for an appraisal on the sale of a commercial property. In the case of an environmental report, if you're going to buy a property, and most people know this, a commercial property, industrial property, you should obtain at least a Phase 1 environmental report, and your lawyer should be giving you, and your agent should be giving you guidance on that matter. The liability will fall upon a new owner to clean up an environmental issue if it is found to occur after the closing, and it can be substantial in nature and wipe out any value or impact value dramatically in that instance. So yes, an environmental report would be a great must-have moving forward on an acquisition for a commercial property. What trends have I seen in the commercial and residential market? The commercial market still seems, small commercial market for street front retail, especially in the Greater Toronto area, is extremely strong, and I think the housing market's been impacted negatively by two things, one being the 15% non-residence tax and the hurdle rate or the underwriting rate for qualifying for a mortgage. There is no non-resident tax on commercial properties. The banks and the financial institutions have always had their own hurdle rate to qualify for commercial property, and I believe that's why the loan to values are typically less than 75% in those instances. I don't know how long the housing market will stay sort of flat, and I don't think anyone else does. But I think it's temporary. I think the market will find a level spot and continue to grow at a normal pace in the future. The demand for commercial income-producing properties or something that can provide income with some work some elbow grease, I think will always has continued to be strong. The other impact on commercial financing will be on the term of the leases, or a credit type tenant lease situation, where if you have a long-term lease to someone like a bank or a chain or a regional chain, securing the property for 10, 15, or 20 years, the financing obviously will be impacted in a positive manner, and hopefully a larger loan-to-value will be possible, maybe up to 70 or 75%. Appraising land. Yes, we do appraise land and land development. It's a comparison approach. Obviously, there's no costing to it unless there's the development aspect. Land for especially high-rise land in the Greater Toronto area is becoming exorbitantly high. It's high-rise land here seems to be getting some increase or some interest. I think there's a number of projects going ahead. We are involved in a few of them at this point in valuation in the Niagara region, and with the influx of people from outside of the region coming here to retire or to raise families, that I think will become a more important part of the Niagara residential marketplace. Appraising land is just a direct comparison approach to value, depending on use, proposed use, feasible use within the Planning and Zoning Act, and that'll be the biggest impact on land, if it can be developed or not. In Niagara, speaking of density and developable land, with the GO train expansion coming through Niagara to Niagara Falls on a full-time basis in the next 5 years or so, there will be an influx of development along the rail line and the rail, especially at the stops, for convenience sake, and we've seen that's a normal trend in any developing transit structure virtually anywhere in the world. So you can expect price increases to come with the improved transit or change in transit through the Niagara region. Thank you for your time, and hopefully I've answered some of your questions. And if you have anything else I can help you with, please feel free to reach out.